The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. This is the Tiger Technicians Hour on this Thursday, the 17th of October. And I just wanted to go through this quickly. The 5-minute E-mini went to a peak E in the 59.29 area. And then it started to pull back. There was a peak G, unusual G, in the 10-minute chart. But look at this. The 5-minute went right down to the 200-period moving average, then rallied, and then came down and took that out. That means you got to look at the next thing on the right, which is the 10-minute 200-period exponential moving average of 58.88. That's the way these things work. So what I say to subscribers of the opening call this morning is that we don't really want to get any new positions. We've got really nice positions. Some of them are up very sharply. I'm looking at this, and I was just saying at a very short-term basis, in the short term, as I said that I should define what that is. On a few days, I'm looking at this as a little toppy right now. I'm going to go. Now I can go to the numbers. So we're looking at the Dow, which is up 95. It was up much more. It went to 43,289 all-time high, and it's down about 100 points from there at 43,180. And that is a leg C. There's no other way I can count that. Most importantly, I'm looking at this thing on a very short-term basis. I think we're getting kind of toppy. I think we make some kind of a short-term top. That's daily chart, not the weekly. Weekly still looks very strong over the next couple of days. And that's concurred by looking at the S&P, which went to a peak C1, C2. Remember that C1, C2 Chapman wave technique? That was back in August. We had that double top in the 56, 51 area. Then it pulled back and it went to peak A, peak B, and then another peak C1, C2, and it pulled back. And I said, the 9-period moving average has held so well. I wouldn't be surprised if we rally and that we could go to a new D. Well, today we went to that D, although we pulled off the 58.78.46 all-time high that was made earlier. We're now at 58.51.26 up 8.60. So leg C in the weekly chart, that says it's still very bullish, even if there's a pullback. If you look at the QQQ, the index 100, that's failed to go to a new all-time high, 503.32. It's trading right now at 492.07, up just over a point. Nothing here is actually very negative. It's just a struggle. And one of the reasons is the SMHs, semiconductors, have had a fantastic, from that intraday, Tuesday slump, where the day before, on Monday, went to 262.26. A recovery high, all-time high was 283.07 back in July. Well, this was a leg D, and it went to a peak D, and then it plummeted down, and now it's trying to bounce back. But the way I'm looking at it, this is telling me that not all things are in sync, because the semiconductors usually lead markets up and lead markets down. So what we've done for subscribers is I've looked at specific areas that were oversold or had good rallies and then pulled back to add to positions or to get new positions. And that's the way it's been. So that, and also I like, for subscribers, I like to get to positions that are single digits, double digits, triple digits, for a variety of price points. And what we're looking at in the semiconductor, yes, there would have been a great time to buy, saying it was just a one-off, but I'm not sure it's a one-off. I think it's a shot across the bow that says, just be a little careful. Those semis, look, if you go to NVIDIA, all-time high, leg E, only a leg. Now, this is the question. So in the Chapman methodology, every once in a while we have to have an alternate count. What is an alternate count? It means, excuse me, you've rallied above the previous high. That was important. That was the peak D in the weekly chart. That was in June at 140.76 before slumping down to the 90s. And now you've come back, but you didn't take out the starting point. The starting point is way down here in the 30s. That was back in October of last year. So that means that the new high can either be a brand new C. Well, we haven't, did we do that today? 140.89. Yes, by pennies, we went to a new high. Either that's a brand new C, or it's the old D that's just recycled and become an E. So then normally what I do is, these are gray letters because they haven't taken out the previous high. Today they did, so they can be blue. But I still have to consider that I need to put into the potpourri of all the other indexes, and they mostly in leg C. So I'm going to call this a leg C for NVIDIA. It's gone to a leg E in the monthly chart, just barely, but it did it by pennies. Right here, let me type that in. And all it says is that if you were thinking of shorting, at this particular point, it's really not the appropriate thing to do. It might be a little later on, but it wouldn't be right now. And the only reason I say that is because it's a little slow. I haven't shut down and restarted for about a week because I'm waiting today to get the new fan put in. So I'm just hoping to get through this safely. Didn't even have many positions because anything can happen. All right, so there it is. So NVIDIA, all-time high. That's fantastic. But you can see the move to the all-time high has been very steady, but it's not the acceleration that you saw from, say, January into the high of June. Now it's a little different. Now it's a continuation pattern. That's a little different. All right, so I'm done with that, and I want you to now go to QQQ, underneath the previous high. Where did it go? QQQ, there it is. That's an F/C in the daily chart. It's a C, a gray C in the weekly chart. Because why? Because it hasn't taken out the 503.32 level. So at any point, it could fail. It doesn't have to, but I'm ready. In other words, this is where you have 1 foot on the brake, 1 foot on the accelerator, and you just let it take and just do what it has to do. Now I need to do this. Look, within the context of all the things that we look at, what I've been talking about for quite some time now, certainly from the August low, I've been saying that there's a chance that for the first time we're going to see the iShares Russell 2000 actually find buyers and more sustained buyers rather than just a pop and a drop. And I think that's what we're looking at. And we've got an overlapping wave right here in the weekly chart at C, former peak C, and now a gray C. But look, if it goes 1 penny above 228.63, that was the high back in August of this year, the week of the 2nd of August, that becomes a D. All right, just make it as simple as possible. And it's peak C in the monthly chart, and I'm anticipating that there will be a D at 228.64. Starts a leg D. All right, I just wanted to go through those to say that we've had spectacular moves off the August low in many areas, not all. For instance, I'll pull on Microsoft, just kind of stuck in this range. But every time it rallies, it fails. Today it rallied all the way to 422.50. Now it's at 417.30. So it's very selective, this move. I'll be back in a moment.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, so I'm going to read this comment because it's funny. It reminds me of something that I'd forgotten about. Let's see, where did it go? I'm going to just find it because it was fascinating. Yeah. Baseball eyeballs in the den. And the Tiger YouTube says, AU, that's Anglo Gold Ashanti, says, AU plus 4%. Where AU opens in the morning, GDX closes at the end of market day. GDX plus 4% today. So it's fascinating because it reminded me of something I'd forgotten about. Years ago when I started doing technical analysis, I had noted that there was a company here in the Boston area called Prime Computer. It was out in Natick, I believe. And I used to follow Prime very closely. And I noted that when Prime Computer was at 12:20 in the afternoon, if Prime was up and the market was down, invariably the market closed up. If a Prime was down, the market was up, invariably the market closed down. So I used that as an indicator for years until they got taken over. And in the interim, I said, you can't rely on one indicator for your technical analysis. And I developed a whole bunch of others, of course. But that was interesting. So to see that was very interesting to note. I'm going to make a note of that, and I'll do a little following of it because I love that sort of thing. I'll put AU at GC. So let's just do this because I want to look at gold itself. Here we go. So GDX, now it's fascinating because GDX right now is up 55 cents at 41.55. Trying to take out the left side high, which I think it's going to do, to go to a leg D in the weekly chart, and that's at about 42. So it's trading at 41.56 right now. And the monthly chart, if you look at the monthly chart, look at these big green candles, and I've had this left side, right side price time match saying that it should take out the left side high of 40, around about 40, that was made back in 2022, and it was 1 month late in doing that, and now that's still active. What happens when I do this left side, right side price time match, that is the plumb line that comes down, says from this side the number of bars on the left should equal the number of bars on the right. It says that sometimes it's a little late, and if it's a little late, but it then takes out the previous high, you can go a tad higher, but then you've got to be careful because it comes right back in and goes underneath the lip on the left side. So as I'm looking at it right now, the GDX is the gold this is the market vectors gold miners ETF, looking very strong, walking the 9-period moving average in the weekly and the monthly, but the daily is getting very whippy. It's making this M-shaped pattern that says, if there could be another pop to the upside, they're starting to get a little bit overboard. Then in the, where was this? In the Tiger Den, I think it was. Let me just check. Question came in. Yes, a question about Microsoft. I'm going to get to that in a moment. But in the meantime, I needed to check here because I can't remember whether it was in the Tiger YouTube or in the Tiger Den. Someone said something about CCJ. CCJ, right here. So CCJ, Kamiko, right here, CCJ, trading at 56.91, up $1.13, leg D, went above the left side high in the weekly chart, and that was an F. But the low that was made to start the new move to the upside is at about 35, and we held that. So I'm going to call this a leg B in the uranium fuel Kamika call. I can change that. I need to right now. Everything seems to be doing very well in this area. And it's a leg E. And I spoke about this. I mean, all year I've been talking about it because we've had a uranium company in the 3s, and then we took money off as it went to the 8s and then pulled back sharply. In fact, and let me just mention this right now, but just to show you how I like to do things for my subscribers. So what I'd said is 834 was the high that was made back earlier this year in Uranium Energy Core, UEC. And what I wanted was to follow the 9-period moving average in the monthly chart to say when a price pulls back sharply, but the 9-period moving average refuses to go negative, it's like a loaded spring to the upside, and that's really good. And that said to me that uranium, over the period of the next number of months, is acting very well and should go to higher highs. That was my thinking. And then the question is the monthly in CCJ and U leg A or F ending the move? So what I need to do, that's a good question. So let me go to the weekly chart because it pulled back and now it's got a very strong leg A to the upside. That's UEC. And then you asked about CCJ. Let me go to that. It's the same thing, but in fact, this one is a leg B. So I'm calling this a leg B. If this is a leg B, this leg up in the monthly chart, at this point, you don't have to worry about it as if it's the end of a move for 3 reasons. One is it's an all-time high. 2 is the 9-period moving average is still extremely strong. The MACD flipped from negative back to positive. The stochastic at 61% is lagging, which in a way is positive because it means it can still go to the 80 or 90% area, but it hasn't. On-balance volume is very good. So as I see it right now, I'm going to go to ABA. I might even renotate this because in the Chapman methodology, you want to be as up-to-date as you can for the notation. There's no, oh my God, you're changing it, and now anybody can do that. No, you want to be as current as you can. So this looks like a brand new A, B pulls back, A. This now looks like a B right here in the monthly back in August, I think it was, of last year. So that's going to be uppercase B. This becomes a C. This becomes a D. It's not that much different, but this then becomes an E. And we don't have to do anything with it because it's an all-time high. Everything's positive. Okay. Kamika core, uranium fuel. In the weekly chart, I have to give this a buy. You're at 79.31%, almost 80%. So I'm giving this a buy signal, but at an all-time high. I really have no choice but to call it a buy mode. So this is a buy mode in the weekly chart of CCJ. The daily chart's the one that says to me, getting a little overbought. It's in leg D, still very positive. On-balance volume is very overbought. There's a lot of volume that's come in. Everything about there's nothing negative, but just on a very basic level, I think it could pull back. Is it going to go from 57 down to 51 or 50? No, I think the first thing you have to look for is how does it hold 55 if it does pull back, but it hasn't pulled back yet. So just to follow up on what I did here, because they correspond, this is UEC, which is a uranium energy core, is in leg F. It could be an alternate count, but I've got this as a leg A in the monthly chart, in the weekly chart. At this point, I'm going to keep it as an A, because so far everything about it is very, very strong. It was stochastic at 87%. So, and we took 31% profit on a little bit this morning on that big pop because it went over 8.34. And that's, I think, the way you have to deal with it. I'll be back in a moment. Dow's up 113.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, so question. If you have the cup formation is this the opposite of the dreaded H? And if so, what happens when you take out the left side high? Oh, that's exactly what I'm talking about. Look, it's a lopsided cup. It looks like a gravy cup, right? A lopsided cup formation with one side sharply down and the other side goes slowly up, or the other way around. And that's what I'm saying. So is there, oh, look. So here's exactly what we're talking about, and we'll see what happens if it does get to the left side high. Look, here's a cup formation. The pattern that we're talking about is the dreaded H. If I can make, there it is. Yeah, so this is, remember, I look at three core patterns. One is straight up, straight down. Other is a cup formation. Other is an arch formation. You can mix 1 and 2 and 1 and 3. And here's 1 and 3. It's the dreaded H, because if you take out the left side low, you can go quite a bit low. You can go 1 to 1 to the downside of the arch. And on the upside, it's the same thing. It's possible, as you make the double top, you've got to be doing some assessing, right? That's exactly what we're doing. So here's one, Solventum Corporation, healthcare, spin-off from Triple M. And just for, there we are. Just for clarity, I should also mention that we are long from way down, had really good profits, and then we added a position because we took off some, so we added them back the other day, and now it's making this cup formation. So 73.40 at a peak E was the high that was made back in September. Then it pulls back pretty sharply to 65, and it comes around, makes a cup formation a little bit, it might be lopsided, we don't know. If I did this as the, right here, as the left side, right side, price time match, that's the plumb line. You can see it's kind of, from the way it's acting right now, that looks like it takes too long. So I'm going to make the plumb line a particular candle. I always favor a particular candle. I'm making it that one. So now let me do this. Let me get rid of the whole Fibonacci stuff right there. And I'll take it away. And what I like to do is from that left side, right there, to the plumb line, we don't know if it's going to be a plumb line, I also draw in from the left side, from the low on the left side, a trend line right here. And I take it to the upside. Now, I don't know if this is correct. It's called the Chapman inside wedge target resistance line. I always make it on the way up, dash green, on the way down, dash pink, dash, dash, dash. Right there. And then I add. Now it looks to me that this corresponds very well. And it says that by the 23rd of October is Friday, tomorrow a week, it should, oh, I moved it too much, by Thursday, the 22nd. By a week from today, it should try to tackle the 73.40 area. It's already gone to 72.49, so it's less than a point away, but that doesn't matter. This is the way I like to look at it. I do the homework, and we'll see what happens. So now the question is, this is a gray leg B because it's under the previous peak. So I'll make it a gray. And all it is very, in a visual, quick visual, it's telling me exactly what's going on. This is a retracement. Remember, this is the pattern we're looking at here, the reverse green Y. There, oops, there it is, right there, reverse Y. And now all I can do is say, look, everything's good. Really nice gains from the entry point that we went into on that low. And if it goes to 73.41 or higher, then this gray leg B, if it's still in this move up, continues, but then I have to, because it didn't take out the left side low, it could be a continuation pattern. You want to be ready for that. This is just like warning signals. A little yellow light goes on and says, all right, just be a little careful. And then I'm doing this now, but it hasn't done it. I would call it an F/B. All right? And then I have to do analysis and say, wow, stochastics at 83 right now, it's good. On-balance volume is good. It's not even close to overbought. The MACD cross positive. The gray relative strength is doing very nicely. And what do we do? And what I'll probably do is say, let's take off a little bit more because this is a trading position. All right? And that's the way you do it. I mean, you aren't the market. You have to organize. And then I'll say, oh, but wait a minute. A leg D in the weekly chart, that means just purely on a technical basis in the Chapman methodology, you could be close to some kind of a pullback. So you just put that whole thing together. I hope that helps you. So what happens when in a cup formation, even if it's a lopsided cup formation, you take out the left side high, you put in the letter that continues. If it hasn't taken out the starting point of the buy signal to buy mode, which this is not even close, then what you want to do is just give it the notation and just say, okay, I'm ready for anything. Raise your stop, take something off. That's the way to do it. Okay. With that said, so I did a bunch of work on that. Now I want to go through a whole bunch of charts. Let me first do this right now because I think we're going to be a little weaker today after having a fabulous move. So this is a phantom peak in the 1 minute chart. You remember the futures? I always say, be prepared to use a phantom peak if you've got a double top bars, 2 bars of the same high, and then the third one goes to a higher high. Consider that that's a possibility. At least look, it got you into that D. You would have taken something off and said, okay, I'm raising my stop, taking something off, and look what happened. It pulled back sharply. He's making a dreaded H. You were absolutely prepared. If I was waiting for at a C, waiting for the D, I'd still be losing money because look what happened. Starting point is probably gone below the starting entry point. So this is looking like it's a failure pattern. Look at the magnet of the 200 period exponential moving average in the 5 minute chart, and it's targeting 58.88 in the 10 minute chart. All right, so with that said, I wanted to look at some charts. Okay, so we're going to go to XRT. So some economic results this morning were pretty good. So XRT is the SPDR S&P Retail Fund. And you've got A, B, C, and it is, oh, this is interesting. And look at this. XRT traded at, on the 26th of August, traded to 78.61. Today's high is 78.68. So that's a breakout. I have to consider that's a buy mode. And the XRT should be going higher. But look at the rectangle formation in the weekly chart. And look at the monthly chart made a peak C1, C2. So far, the SPDR retail is still acting very well, but it's not breaking out. The RTE, what is that, RTH? Van Eck retail ETF, all-time highs as we.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust. The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so the VanEck Retail ETF, RTH is the symbol, trading at 221.28, unchanged right now, has Amazon as 20% and therefore it made an all-time high yesterday, just a tad under it today. Leg G/C because it was an instant restart. Leg E in the weekly chart. So I'm looking at this and I'm saying, under other circumstances, if I was just looking at the chart, I would say, wow, just on a visual basis, it looks like it's getting overbought. It hasn't given any sell signal yet. So you have to put the two things together. One is emotional, looks overbought. The chart doesn't know that. It's just moving the way it moves. So it moves very nicely. And until at 221 right now, it closes on a weekly basis under 212. 215 probably is the number, but I'd say 212. Closes under that. It's just, it's still in a bull phase, but it's getting a little toppy. All right. So with that, let's just have a look at AMZN. That's Amazon. Amazon made a peak C in the monthly chart, all-time high. Then it pulls back. It's kind of struggling a little bit. I put it in the same, not in the same category as Microsoft. Microsoft chart is not as positive as this. It's not negative, but it's just not as positive. So this is still holding well, but I just give parameters. If Amazon trades under 180, closes under 179, I think that impacts the weekly chart for a timeout. If it pushes above 193, it's at 186 right now, in the next week or two, that's going to be very positive. Let's go to, so Apple. Apple is trading down 10 cents, made a spike peak E. Remember, this is Chapman stalk leg formation, waiting for it to get into the beak phase, which says it should pull back, probably to the 224 level. Right now it's at 231, down 16 cents. Just watching it very closely. So did it make a new all-time high? Let's see. That high was 230, taking a little time there, 237.23. And the high 3 days ago, 237.23, was 237.49. It's amazing how you can go like this and then make a nominal new high, just pennies above, and then start to stall. So I'm watching this. Just says to me that over the next 3 to 4 weeks, Apple, if it closes under 228, it's at 231 right now, it's going to take a timeout. And if it pushes into the 240s, that's fantastic action. I think it's going to have a little trouble right now doing that, but so far it's at the high level consolidation, nothing to complain about. TRV, now I hope I've still got this notated. This is Travelers. So it goes to a peak E right here, and then squeaks to an F. Ooh, wow. Look at this. And then squeaks to an F, pulls back sharply, and now is this a G or is this a brand new A? Oh my, did it have earnings today, G/A? G says, be real careful. A says, are you kidding? Every single dip I want to buy. Right now, this is excellent action. It's only a leg C in the monthly chart. Wow, this is one I followed for ages. I just didn't feel comfortable buying it because it has a big move up and then it takes its time and has a pretty big, like a stair-step move, but the steps are pretty big and the way down is also pretty big. So is this going to be the same thing? It's gapped up and it's going to fill the gap in the 250s? I think yes. But I do think this is a C in the weekly chart, and that's really positive. So that's Travelers. Wow, just yesterday it was tutoring in the 242s. Here it is at 261.38. Very nice. Must have been earnings. I want you to go to IBM, the stock that I've spoken about for 2 years now, as having morphed into an absolute leader. And yet we don't have it. Made a peak D a few days ago in the daily, calling this a leg E to the upside in the weekly and a leg D in the monthly. What a fabulous move. So IBM looks like it's getting ready for a little bit of a digestive phase. And when I say digestive phase, sometimes it's just time. It's not price. It's really just time. We'll see what happens. So far, there's nothing negative about it. So it hasn't even started a digestive phase. But look at that. Look at that. From this peak D, this leg E from the 180s to 230s, that's fantastic. It's very, very positive. Okay, next thing I want to look at was Goldman Sachs. So this is very interesting for us because Goldman's made a peak C. It had a big spike the other day, and the question came in, is this going to be the top for Goldman Sachs? And I said no. The way I'm looking at it, everything about it is suggesting that it should go higher. And look what happened. It's come back so nicely from that spike to the 540 level and plummets down to 517 in one session. And it had an inside day yesterday, a doji candle, tiny little plus sign candle, and a nice green candle so far today at 443. I've got this as a leg B in the weekly chart. I could give other counts, but I just don't see why I should. And I've got this as a leg E in the monthly with a Chapman instant restart potential. Goldman Sachs, unbelievable, huh? And there's that cup formation. Remember what happens when it takes out the left side high from previous at a peak E? You can have an alternate count if it hasn't taken out the original low, which was at 130 back in March of 2020. But no, this is a C, D, and now we're in leg E. So this is all very, very fine. But I have to mention this. The weekly chart and the monthly charts are both suggesting that on the next big, I don't even want to call it a digest, on the next big pullback, if 444 is taken out, which is the 12, this is the 14-period exponential moving average in the monthly chart. If that is taken out, I have to consider that there might be a serious top, but of course it's trading 100 points high at 534. So that's I'm just saying that's why I'm looking at these. They have to give me the evidence. Home Depot question came in. Where was it? TRV did have earnings, so that's Travelers. I just sold half of Travelers, had a small position in it. Oh, very nice. Rochelle, you're ready to lovely trading. I like to see that. So Home Depot, alternate count, that's a G/C, so it went to a D, getting a little toppy leg D in the weekly chart, leg D in the monthly chart. Oh, that went above the 420.61 high. We need to talk about it as soon as I return.
The consistency you're looking for is closer than you think. One or two adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the second and fourth Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So I just need to mention this quickly. So UEC, remember we were talking about uranium energy call, which we took a little bit of off today from our core position. Has gone even higher. It's gone to 866, trading at 856. So the higher that you go in the cup formation above the left side high, the greater the chances are that you're in a new buy phase. So I just want to clarify that. Wow, what was I going to look at a moment ago? Oh, AA. Question about Alcoa. Should I take some money off? This is a leg just like Home Depot had a G/C and then popped to a D. I would say take, was the question a little bit off? Whoops, I can't see it. I'll get there quickly. Will you take profit in AA? No, I would not get out of AAA. This has got the pattern that says the dreaded H should go in a cup formation in the weekly chart to the previous high, and that high was in the 45 area. So I would not. I'd take a little bit off for sure, and especially since you just asked me, that means that you have a little hesitation. Feel comfortable, take a little bit off, but I would keep the core position because this looks very much in the weekly chart that the way it's pushed away from the 200 period moving. Alcoa AA trading at 41.62, down 45 after popping to the 42.95 area. Yes, I like it very much. Take a little bit off, that's all. Money management, I love that because it keeps you in the game. So I hope that helps you, because the way I'm looking at it, it should try for the 45s over the next couple of weeks. All right, and the other thing is PAVE. I don't know if this is in PAVE. It should be. PAVE is this is infrastructure ETF. That's making a new, as we speak right now, new all-time high. These are very good signs about the economy and about the market at this particular point. So stay in the position, but take a little bit off. Have a wonderful day. Check out my opening call, folks. I think we've managed this, getting through the Straits of Gibraltar very well in this particular phase. I'll be back tomorrow. Have a great day, and stay tuned for Steve Rhodes. I believe Steve, if he